Hello, I am Jim Schaefer, a California family law forensic accountant, and I am pleased to co-present this presentation on phantom income from pass-through business entities. Kathryn Kirkland is joining me. She is a retired certified family law specialist with 40 years experience and an author for family law publications. Later in our presentation we use DissoMaster as an example of a computer program used to calculate income available. Art Grader, a DissoMaster computer consultant, has reviewed our input screens and says they are correct.
There are several types of entities used by small businesses that all have as their tax status a pass-through provision that allows the entity to pass through all the income and deductions of the entity to its respective shareholders or partners. Each has slightly different other characteristics which often dictate which type of entity is used for a particular business. The most common type of entity that has the common characteristic of pass-through taxation is the S-corporation. For purposes of discussing the concept of phantom income, we will use the S-corporation in this video.
After an introduction to today's topics, our presentation is organized in question and answer format. I will address the forensic accounting and income tax topics.
And I will discuss the legal issues. When counsel discovers that a client has an interest in an S-corporation or a client's spouse has such an interest, it is extremely important that counsel and the client's retained family law forensic accountant confer regularly about the various steps in the determination by the forensic which show that phantom income exists and how it should be considered in any specific case. Depending on which party counsel represents, the analysis can be different and the legal arguments will change. The issue of phantom income is a very good example of why counsel should never agree to a 730 expert for a family law forensic accountant in a family law case. Counsel cannot be sure that the chosen family law forensic accountant actually knows how to determine phantom income. If that person does know how, that person cannot make any determination which is discretionary with the court and therefore cannot reach any conclusion as to how phantom income affects income available for support or for any other issue in which income of a party is relevant. If the court does order a 730 forensic expert, counsel for both parties should object and ensure that the court rules on the objections. If the court overrules the objections, each counsel should strongly advise their respective clients to retain their own forensic accountant and have that forensic prepare a report under Evidence Code Section 733 to rebut whatever errors the 730 makes. Jim, what IRS documents are required to fully qualify an entity to be an S-corporation?
IRS Form 2553 is completed and filed with the IRS to elect S-corporation status and therefore be taxed as a pass-through entity. Form 1120S is the annual form for reporting the income and the deductions for the S-corporation, which will be passed through to the individual shareholders. Each shareholder receives a K-1, which is an IRS form that shows the amount of income and the deductions that each shareholder must report on their tax returns.
I will further illustrate the useful information that these forms provide to counsel. Form 2553 shows the names of all the shareholders and their respective percentages. That information helps corroborate the client/shareholder's truthfulness and helps the spouse/client have trust in the presentation. Form 1120S shows the necessary information needed to determine a shareholder's taxable obligation as to their share of the proceeds from the S-corp. The K-1 shows the income and deductions for that shareholder and is the basis for their IRS obligation and the determination of whether or not phantom income exists. How is the amount of tax owed by the shareholder calculated based on the income and deductions passed through by the S-corp?
Let's walk through Schedule K-1 for Mary the shareholder. In this screen we will zoom in on the lower left quadrant and note shareholder name at line F and percentage interest at line G. Line G is Mary's percentage ownership in the S-corporation, assuming that her ownership did not change during the tax year. Next we will review lines 1 through 10. Line 1 goes on the shareholder's personal tax return on page 2 of Schedule E on line 28A. If this shareholder has more than one K-1, the income or loss information will be listed on lines B, C, etc. If there are many K1s, an attachment to the return will be necessary. Lines 2 through 10 are available for recording income or loss for types of activities of the S corporation which are not its business. For example, line 5A and B show dividends received by the S corporation from stock holdings it may own. If there are numbers on any of the lines 2 through 10, those numbers are also listed on the shareholder's personal tax return. Lines 11 and 12 are the deductions which are appropriate for activities of the S corporation other than its core business. These deductions also appear on the shareholder's personal income tax return. Line 16 on the K1 lists items affecting shareholder basis. This is the line on which distributions, sometimes inaccurately described as dividends, paid by the S corporation are listed. S corporation's tax return on page 3 under Schedule K shows the total amount of distributions paid by the corporation to all shareholders on line 16D. The individual shareholders' percentage is multiplied by the total amount of distributions to verify the entry on line 16D of the K1. This amount is subtracted from the shareholder's basis, which is why the distribution is not income.
We now see how the calculations show the amount of phantom income. We stated at the beginning of our discussion that the court has discretion to determine whether or not it will allow the input for phantom income in the computer program used to calculate income available for support. Is phantom income always used by a court to determine income available in a family law case? No. The court has discretion to grant or deny a request to include phantom income in the calculation of income available. If income to the corporation is retained in the corporation for reasonable business expenses, the amount is not attributed to any shareholder as income. In remarriage of Blazer, the Court of Appeal affirmed a decision by the trial court, which described income to the business that was used for capitalization and vertical integration as a reasonable business expense and not attributable to any shareholder as income. The specific findings about the business in Blazer are unlikely to be exactly duplicated in any future case. However, the principle set forth in Blazer, if supported by evidence, is that a business that retains income for reasonable business purposes will not be considered available to any shareholder. If the party in the proceeding is a minority shareholder, it is unlikely that that party has any decision-making authority within the corporation, so any income that is retained in the corporation or is distributed to the shareholders as dividends is most likely to be accepted by a family law court. However, if there is collusion between the majority shareholder and the minority shareholder for the purpose of thwarting the authority of the family law court to make proper orders, that collusion will incur substantial sanctions from the court.
Having arrived at the amount of phantom income, if the calculations of phantom income are used in a child support computer program to determine income available, what are the inputs for phantom income and on which lines do they go? Pass-through income on the shareholders K1 is $100,000, but only $60,000 was distributed to the shareholder. Here is the computation of phantom income. Income reported on Schedule K1 is $100,000. Distributions are $60,000, which amount is deducted from the income reported on the K1. $40,000 is phantom income. Let's proceed with the software input. The amounts shown in this example are annual amounts for the sake of clarity. The entry for the K1 income goes a line labeled Miscellaneous Ordinary Taxable Income. It is found in the drop-down menu of Other Taxable Income. The entry for phantom income is entered as a negative number on a line in the drop-down menu of Other Non-Taxable Income called Depreciation and Other. The amounts entered are shown in the final printout in the larger category under which they were entered.
Here is my list of things to remember from today's presentation. 1. Object to the appointment of a forensic accountant as a 730 expert in phantom income cases. 2. The inclusion or exclusion of phantom income in income available for support is at the discretion of the court. 3. When entering amounts into support software, K1 income is entered as other taxable income. Phantom income is entered as a negative amount as other non-taxable income. We hope you found this presentation a good refresher.
Please visit our YouTube channel with approximately 25 short videos on family law topics. The name of our channel is Common Issues in CA Family Law. Bye for now.